Facebook shares have actually been surging, adding the most gains to the S&P 500, rising about 4.5% after Mr. Zuckerberg shared his testimony before Congress. It was one of the biggest one-day percentage gains for the stock in nearly 2 years. Well, Howard Yu from the IMD Business School joins us now live in our studio to take a look at that testimony. And of course, from a management perspective point of view, it's all about business leadership. Part of the reason why those shares actually rose was because a lot of shareholders felt that actually Mr. Zuckerberg didn't seem too combative. He seemed to be doing a decent enough job. Of course, that testimony continues, so we don't know where those stocks are headed tomorrow. But from a business perspective and a leadership perspective, what sort of position is Facebook in right now?
Right. So in many ways, the stock price of a company really reflects the underlying health, at least what investors believe in. So right now, the surge of the Facebook stock price, fairly to speak, is the investors mostly believe the underlying health of the business model of Facebook stay intact. However, what would be really interesting to keep an eye on is the marketing mix by big brand advertiser, whether they would reconsider the mix of the usage or the spending on Facebook versus more traditional media as well. That would be the next indicator I'm sure investor would be paying an eye on.
All right, and you say this is the next indicator, but how big a shift is that? How worrying is that to shareholders?
Yeah, I mean, fundamentally, how Facebook make money is advertising. And so the biggest revenue stream is essentially this big brand advertiser, whether they're going to continue to spend as much money on the Facebook platform or they're going to switch to elsewhere. And primarily because of the Facebook scandal really exposed the corresponding risk. When you go and advertise on Facebook platform, it's not just generating a lot of like and conversion of sales, but there is corresponding risk as well. And that highlighting perhaps is one of the key discussion among many of the big brand company right now.
All right, and it's key discussion as you say, but it's also a key factor in Facebook's revenue. That's how they make money. They collect this data, they potentially get it to advertisers who target these consumers, because the ultimate thing about Facebook is the product is the consumer. So if that business model goes away, how will Facebook and other companies like it make their money in the future?
Right, so that's the big discussion, right? Because historically in the big tech world, particularly on Facebook and Google, advertising is king, including YouTube and Instagram, and because these are free services. So if advertisers begin to scale back their spending on Facebook, that would destroy their fundamental business model. That require them to shift into a subscription model or any other thing else. Now, what's interesting, of course, subscription is not the end of big tech firm. In fact, if you're looking at Amazon Prime, if you're looking at Netflix, they are racing head-to-head against YouTube, for example, which is essentially free. So subscription is actually a very viable business model as well in the world of high tech.
Right. All right. Well, Howard Yu, thank you so much for coming in for that analysis there.